How's it going, everyone? It's Sam. Today we're talking about Cathie Wood and how she believes that index funds are a big bubble. So I'm going to talk about that, tell you about my background on this, what I'm thinking, whether I think passively invested funds like index funds are better than mutual funds and or individual stocks. I think this is really important now more than ever, especially coming out of the pandemic. And I want to tell you about my experience with it and what I think is the best solution for you. So, if you guys like this, please leave a thumbs up. I really appreciate that. Also, if you want to start your investing or you just want some free stocks or you want to support the channel, check out the link down below to WeBull. They're giving away 4 free stocks if you deposit $100. So that really helps out the channel a lot. I really appreciate it. And you can get some free stocks. They upped it from 3 to 4. So 4, they're starting with 4 free stocks today. So definitely check that out. So the big question with a lot of new investors is where to put their money. A lot of us hear that index funds are the way to go, but Cathie Wood just came out with a pretty long video where at the end of the video, she talked, and this is just a couple days ago, she talked about how she thinks that index funds are one of the biggest bubbles essentially out there. She's saying that there is a lot of money going into them, and I've been thinking about this myself too. So right now, you can see here, passive investing is about 45% of all assets for U.S. stock market funds or U.S. stock-based funds. This is up from 25% a decade ago. This is a massive amount of money that is going through passive index funds, passive funds, and it does cause you to think a little bit, right? So I had one of my friends who I talk about finance regularly with him, really bright guy, just start to talk about this today. He was talking about ARK Invest and whether it's a good idea to invest with these innovative mutual funds as opposed to an index fund. Now he has the majority of his money in index funds. So it got me thinking about the same thing. And I have my own experience from this year, but just thinking about it here for a second. With index funds, the idea of it is, first of all, you are well diversified. You have a lot of different stocks that you have bought into. You don't have to do the research. You don't have to risk on a certain stock. You can be well diversified. You always know that it's going to go up over the long term, essentially, right? So over a long enough time horizon, it's not like the entire stock market is going to go to zero. You also don't have to pay very much for the index fund. Some funds are actually 0%. Some are 0.03% assets under management. So you're really not having to pay for this. But what do they always say? They say past results are not indicative of future results, right? So that is maybe not the exact phrasing, but essentially they're saying that just because something has worked in the past doesn't mean that's going to work that way in the future. So the question is it smarter to invest in these funds that are going after innovative technologies as opposed to when you invest, let's say you invest $500,000. Well, you know some of that money is going to companies that you don't believe in, first of all. Maybe you think it's a dying industry. Maybe you think they have a terrible business model. Maybe you just don't like the company in general. Maybe you think that they're not a good quality company. Well, then you might be thinking that you should invest in a different way. So let's take a look. ARK Invest has their largest fund. It's called ARKK. It's their innovation ETF. Over the year, just year to date so far, they are up over 100%. Let's take a look at the S&P 500. They are up about 9.5%. So of course, the thing that all index fund believers say is you can't pick out the best companies. You can't pick out the best mutual funds because while one might be up one year, well, a different mutual fund company will be up the next. They also say, you have to pay a pretty high expense ratio compared to an index fund, which drags down your return. So pretty much you're taking a random approach just based on old results that you think that the stock will go up or the mutual fund company will be able to perform that well in the future. And you're paying an extra amount. You're paying extra just to try to take that bet and try to beat the odds. Warren Buffett has famously bet hedge fund managers that they could not beat the S&P 500 with their fees baked in, and he made $1 million bet and won that bet. So what do I personally think after Cathie Wood said that she thinks too much money is going into them? There are a lot of companies that are being bought that aren't worth it. You can also see Michael Burry, who predicted the 2008 crisis. He says that this is very much like the bubble in synthetic asset-backed CDOs before the great financial crisis, and that the price setting in the market was not done by fundamental security level analysis, but by massive capital flows. So a lot of money is going into index funds, whether it is going to good companies or bad companies. These companies are continuing to get money into them just for the fact that they are in the index fund or the mutual fund or whatever the passive security is. My thought is this. I think that this is going to be a balancing effect, right? We have a bunch of money going into index funds. It's being allocated in ways that aren't very efficient, right? So you're buying companies that aren't quality companies. They're not moving forward. They're just boring companies with outdated business models. And I realize that I have about half my funds in index funds. So I do believe in index funds to a certain extent, but I think that you are wasting money a lot of the time when you invest in those. Now, you do get to take out some of the risk, right? So you do take out some of the risk of individual stock investing when you do that. But if you're investing in individual stocks yourself and you're investing in maybe 20 or 30, I don't think there's that much risk in that. So of course, yeah, if one of your companies goes down to zero and maybe you have 30 different stocks, so you have 3.3% in every stock, that will hurt if one company goes bankrupt. So you would lose 3.3% of your portfolio. But I think overall, this might be a better approach if you are willing to spend the time, because you are buying companies that are leading in innovation. You're buying companies that are moving forward, that are changing the game, disrupting. They are gaining massive market share. Now, there is a lot of research that has to be done with that. You can't just buy every company that you hear about that you think is going to go up. There is extra risk, there's extra time. So some people turn to these mutual funds like ARK Invest. And I think it is hard to pick a good mutual fund. I think ARK is different from a lot of other companies. I think that they are producing a lot of value and look at different metrics than a lot of companies. I'm not saying that they're going to go up in the future. I have no idea. I don't think that they have any idea. But I think what they're showing is that there's a different way of investing that is not just index funds. And I think, like I said, there's going to be this balancing act where more money is brought into index funds. It brings us more opportunity to invest in individual stocks and for other mutual fund companies to actually outperform the market. So I think it leaves the door open when there's a lot of dumb money coming in to actually make money on some individual stocks. Now, I think we've seen a massive shift towards index funds. And now maybe over the next 5 or 10 years, we'll see some shift back to individual stocks and these actively managed funds like ARK has. Now, they are getting a lot of money in the ARK funds right now. I don't know a lot of other companies that can compare well to ARK Invest and how well they're doing. I know personally, I have bought a lot of companies this year individually, and I started to do this around the pandemic. I saw that there was a lot of money being flushed out of the market, and I felt like a lot of it was inefficient. It didn't make sense because there are companies that were going down 50% that I felt like obviously Facebook is going to be around in a year, 2 years, even if it takes 5 years for them to return to their price beforehand. I thought that's 100% return. If they go down from 100, let's say, to 50, and then I invest in them and they go back up to 100, I get 100% return. Of course, those aren't the actual numbers, but I felt like that was inefficient. So I started investing in individual stocks, and I have outpaced the market pretty significantly. It's hard to determine because I have multiple portfolios and I bought at all different times, but I can nearly guarantee I have beat the market by a significant amount, maybe 5 to 10% at least. And that is due to some research and just picking companies that I thought were going to grow as opposed to just a broad-based index fund. So Cathie Wood is believing that actively managed funds will be the way of the future, especially with their individual funds that they have. She thinks that they are leading innovation. They are looking at disruptive companies. Other investors are saying the same thing. They're saying that there's too much money flowing into these dumb companies, into these index funds, and it's inefficient. I think that this is a balancing act, like I said, that will go back and forth. So if you want to follow along, if you want to see the companies that I feel like are undervalued or are growing so quickly that they're going to continue to grow in share price, if you want to follow that along, you could definitely hit subscribe to the channel. Definitely check out WeBull. If you want to support the channel, you can hit the like button. And if you want to see some stocks that I think are good growth stocks, I did a video just earlier that is on the 4 best growth stocks that I see in the market right now. And definitely check that video out. It'll be right here. I appreciate it, and I will see you in this video.